In an effort to battle record high inflation now, the Federal Reserve raising interest rates to a level we haven't seen since 1994. And even more increases could be on the way. Here's News 19's Eleanor Timone.
Prices are going high, inflation's going high, and so they're trying to pump the brakes a little bit.
The Federal Reserve raising interest rates 3/4 of a percentage point Wednesday, a move the nation hasn't seen since the early 90s.
We haven't seen a rate hike this high in 28 years. So yes, it is pretty aggressive for the Federal Reserve to do this.
Carl Blackstone from the Columbia Chamber says it's going to cost people a lot more to borrow from the bank.
They raise interest rates to try to cool off the economy. What they're trying to do is encourage people to save money versus spend money.
Blackstone saying long term, these high rates will slow down the country's economic growth.
Instead of growing at a clip of 2.8%, they're going revise the number down to 1.7%.
What it means is really that it's hopefully going to start to help balance out the market. Right now, it's just been so skewed so heavily one way that it's been difficult.
Real estate broker Andy Brumbaugh says those looking to buy will need to adjust their spending.
Lessens your buying power. So you're going to have to adjust your price point, adjust what your expectations are of what that home is going to look like.
Both saying these higher interest rates are here to stay.
I don't think you're going to see the big swings happen. I think we're pretty well settled in.
I do think we'll have a different market come September.
Eleanor Timone, News 19 WLTX.
And shortly after the interest rate was increased today, U.S. stocks closed slightly higher. Federal Reserve Chairman Jerome Powell saying he does not see signs of a broad economic slowdown as the central bank tries to tackle 40-year high inflation.
We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store.
The increased interest rates mean you'll be paying more for mortgages, car loans, and credit card debt. On top of that, American families are already spending nearly $350 more per month on items that they bought at this same time last year.